Well, BP stock hit over and over again, losing roughly half its value since that Deepwater Horizon rig exploded in the Gulf. But you ask most Wall Street analysts, they call the stock a buy. Oppenheimer's Fadel Gheit has been covering BP for years, and he calls it a unique investment opportunity even now. Thanks for joining us. I appreciate it.
Good morning.
Why, and especially on top of this, given Moody's downgrade again of BP this morning and so many unknowns, do you think this is a, quote, unique investment opportunity given all of that?
I still do, unless the total liability exceeds $100 billion, which is not very likely. I think BP is going to go through a very rough period, especially in the next 6 to 9 months. The first step here is to stabilize the company financially, which they have done so with the agreement with the White House a couple of days ago. They're already going to establish this escrow account, which they will fund it with $5 billion every year, this year and then the next 3 years. The company is still generating over $30 billion in operating cash flow, and they spend about $20 billion. So all in all, they have plenty of financial flexibility going forward to take care of the cleanup as well as compensation. They're also going to sell assets in the next 12 months, generating about $7 to $8 billion, plus the cash that they have on their balance sheet. So all in all, I look longer term. BP can still withstand the pressure of $5 to $6 billion in cleanup costs every year and $5 to $6 billion in claim and compensation in the next 10 years, and still be able to handle its financial affairs, if you will, and keep the company running.
You say BP can handle this unless its all total liabilities exceed $100 billion. The question remains, we have no idea what the total liability will be going forward. Nowhere near the full claims have come in. The White House's escrow account could get much, much larger. We just don't know.
We have to look at what the company is worth and what the company's capacity, if you will, to generate cash flow. And I still think on $75 oil and $5 gas, I think the company will be strong. Obviously, with a tremendous paring down of its stock value, with $60 in April, now it's $30. One have to keep in mind, every $10 billion would cut BP market value, if you will, by $3 per share.
Looking at the suspension of the dividend, that's going to free up about $10.5 billion annually for BP. That's good in the case of having more cash on hand to deal with the crisis, but BP doesn't have a cash flow problem. What does that do to potential investors? A number of people rely on BP's dividend, especially in the UK, through their pension funds. People live on it, retirees. A healthy dividend is a strong investment selling point for people right now. You take that away, you wonder who wants to jump into BP.
Correct. That's the whole idea, is that the suspension of the dividend for the next 3 quarters will free the company about $7 or $8 billion. But I do believe that they will reinstate the dividend in 2011. They just cannot afford not to pay dividend because, as you just mentioned, a lot of pension funds, a lot of pensioners obviously live on BP dividend, both in the U.S. and in the UK. So my view here is that BP, given the fact that until recently it was trading at a dividend yield of 11%, which is unsustainable and unlikely, obviously, to remain with us. So cutting the dividend in half will still have BP yielding about 5%, which will put it ahead of Exxon, Chevron, ConocoPhillips, and in line with Shell, Eni, and Total. So cutting the dividend, in my view, in half would be the right thing to do sometime next year.
You mentioned all of these major competitors, global oil companies, Exxon, Chevron, et cetera. What do you think the broader implications are here, Fadel, for the rest of the oil industry in general? People aren't looking at the Exxon Valdez spill now when they're investing in Exxon.
Well, the comparisons are a little different. I followed Exxon during the Valdez. Obviously, it was a disaster. This one is much bigger. Valdez cost Exxon about $4.5 billion. this disaster is going to cost at least 10 times, maybe even 20 times, because nobody really knows. The size of the oil spill is significantly more. Now the environmental issues are much more focused on, very important. So it's a little bit difficult to compare this disaster compared with what happened 21 years ago at Valdez. But having said that, one has to keep in mind that Exxon, the initial claim on Exxon was $11 billion. They ended up paying less than $1.5 billion. So people have to put things in perspective. I do believe that BP will be liable to the largest, amount ever. More than Union Carbide and Bhopal, more than Exxon Valdez. But it's probably a little bit exaggerated when we talk about hundreds of billions of dollars.
That's a good point. I mean, it took 20 years for the Supreme Court to come down with a final ruling on the payout for the Exxon Valdez disaster, and it was cut many fold from the original ruling. Looking, though, and we've talked about this, Fadel, at the other players, there are 6 companies involved here, everyone from Transocean, Anadarko, Cameron, Halliburton. They still have not gotten a lot of attention, yet there will be finger pointing, there will be lawsuits thrown at one another. What should investors be looking at in those companies related to this disaster?
Well, basically, if my advice here, and that's what I tell our client, if you are interested in one of these companies, what you would have to keep in mind is that invest based on the worst case scenario related to the company that you are interested in. If I am investing or if I'm recommending BP, which I do, I have to take the worst case scenario for BP and assume that BP will be fully responsible and nobody else will be sharing in this liability. This is not likely. The most likely is that the partners will share some of the blame and some of the liability. But to protect myself as an investor, I have to assume the worst case scenario. So I see if the upside potential is significantly greater than the downside risk. And in the case of BP, I still believe the upside potential in the stock is significantly greater than the downside risk.